My name is Ronnie Michael, certified public accountant, and this is the Personal Finance Playbook. Improve your finances, improve your life. The title of today's episode is Fundamentally Flawed. Health insurance is not insurance. Let's start with a basic question. What is insurance? At its core, insurance is a financial product designed to protect you from catastrophic, unpredictable events. Think about your car insurance. You don't buy it to cover an oil change or new tires. You buy it in case you wreck your car in an accident or cause a multi car pileup that results in massive liability claims. These are rare, unpredictable events that would be financially ruinous if they happened. The economics of how insurance companies work are actually pretty straightforward. They collect premiums from a large group of people, pool that money, and use it to pay for the rare and catastrophic events that happen to a relatively few people in the relatively large group. They make money by carefully calculating the probability of these events happening and charging premiums that are slightly higher than what they expect to pay out in claims. This process is called underwriting, assessing risk and pricing it accordingly. It is a proven business model that goes back literally thousands of years. Now, does what we call health insurance in America today fit this model? Not even close. True health insurance would cover you if you got diagnosed with cancer and needed $200,000 in treatments, or if you had a heart attack that required emergency surgery. These are the catastrophic, unpredictable events that actual insurance should protect against. But what does our health insurance actually cover? Routine doctor visits, prescription drugs, mental health counseling, acupuncture, birth control pills. Basically, a bunch of things that are related to healthcare generally. But these general health care things aren't unpredictable catastrophes. They're predictable, often routine expenses. Think about it. You know you're going to need an annual physical. You know if you have high blood pressure, you'll need medication every month. These are certainties, not risks. Calling it insurance to cover these things is like calling your cell phone plan communication insurance because it covers your predictable monthly cell phone bill. So to summarize so far, what we commonly think of as health insurance is not actually insurance. But you might be thinking, so it's a little bit of a misnomer. So what? Well, this misnomer has grave consequences. Here is where things get really messed up. Health insurance companies legally aren't allowed to properly price risk. They can't charge you more if you're obese, if you're an alcoholic, or if you have pre existing conditions. Imagine if car insurance worked this way. A 16-year-old boy with a Ferrari living in a major metropolitan area would pay the same as a 45-year-old woman with a perfect driving record who drives a minivan in rural Nebraska. The system would collapse immediately. With car insurance, the rate you pay is adjusted to your actual risk. If you get into an accident, your premiums go up because you've proven you're more likely to cost the insurance company money. If you go years without any incidents, your rates go down because you've shown you're a lower risk customer. This is how insurance is supposed to work, pricing based on actual risk. But health insurance, everyone gets charged roughly the same regardless of their lifestyle choices or health status. The healthy 25-year-old who runs marathons pays the same as the 55-year-old diabetic who sits at home all day. This is not insurance. If you really think through the consequences of this kind of system, you'll realize it's a wealth transfer from the healthy to the unhealthy. All the problems we see with health insurance come from this fundamental flaw. Premiums keep rising because healthy people drop out of the system when they realize they're subsidizing the less healthy. Insurance companies can't properly price risk, so they have to charge everyone more. Customers are unhappy because costs keep going up while coverage seems to shrink. Companies in this system are forced to guarantee payment for people who are guaranteed to be expensive. For any business to succeed long term, the transaction between business and customer must be mutually beneficial. Customers need to feel they're getting value for their money, and clearly that is not happening. There may not be a more disliked industry in America right now. Until we recognize that health insurance isn't actually insurance, we'll keep trying to fix a fundamentally broken system with band aid solutions that don't actually address the core problem. What do you think? Does this apply to your life? Leave a comment below, and thanks for watching.